Imagine this. Your phone rings at 2:47 in the afternoon. It's the bank. The loan officer's voice is professional, polite. She's calling about your mortgage application. She doesn't need long. The answer is no. You paid every bill on time. For 7 years. You worked the same job. You saved the down payment. You filled out the paperwork they asked for, then the extra paperwork they asked for after that. You did everything they told you to do. The bank still said no. In the next few minutes, I'm going to show you exactly why that's not a mistake. It's not your mistake. It's by design. This is the credit card rigged system. Let me introduce you to Sarah. She's 32. She makes $74,000 a year as a project manager. She pays her rent on time. She pays her car loan on time. She pays her credit card every month, never late, not once in 5 years. On paper, Sarah's doing everything right. But here's what the bank sees that Sarah doesn't. Look at how it happened. Sarah carries a balance on her credit card, $5,300. She didn't plan to. It started as a vet bill 3 years ago, then a flight home for a funeral. Then her car broke down. She's been paying it down ever since. Every month she pays the minimum. The card company tells her that's fine. Your minimum payment is due on the 12th. Sarah pays on the 11th. Now do the math with me. Sarah's annual percentage rate, or APR, is 24.99%. The minimum payment is 1% of the balance plus interest. The card company set that formula. It's printed in the agreement. At that minimum payment, on that balance, at that rate, how long until Sarah owes nothing? 17 years. 17. She'll pay $14,700 to clear a $5,300 bill, almost 3 times what she borrowed. Here's where it stops being math and starts being something else. The minimum payment isn't there to help Sarah pay it off. The minimum payment is there to keep Sarah paying. Forever. Or close enough to forever that the difference doesn't matter. Think about that. The bank doesn't lose when Sarah pays the minimum. The bank wins. The longer she pays, the more they collect. And Sarah is the lucky one. That's Sarah. She has options. She's going to feel the squeeze and adjust. The next person doesn't have options. And here's where it gets harder to swallow. Meet Marcus. Stay with me. Marcus is 38. He drives a forklift at a distribution warehouse outside Atlanta. He makes $42,000 a year. He has 2 kids. He's been at the same job for 11 years. Marcus didn't go looking for the credit card. The credit card came looking for him. 3 pre-approved credit card offers in his mail in 1 month. 2 more in his email. A banner ad on the bus stop bench he sits at every morning. A screen at the gas station when he fills up his truck. The cards are everywhere Marcus looks. Why? Because Marcus is more profitable than Sarah. The credit bureaus sell lists. Every adult in America has a file with Experian, Equifax, and TransUnion. The lenders buy access. They ask the bureaus for everyone with a credit score in a certain range. People who carry a balance. People who miss a payment now and then. The bureaus hand over the list. The lenders mail the offers. That's not a guess. That's a number on a spreadsheet at the bank. Let that sit. Marcus's credit score is 680. Not great, not terrible. Banks know exactly what someone with a 680 score does. Here's what they know. They carry a balance. They miss payments. They pay fees. They pay penalty interest. They generate revenue that someone with an 820 score never will. So Marcus gets the offers. The wealthy don't. Marcus takes one. $1,200 limit. 27.99% APR. He uses it once for a tire that blew out on the highway. He's planning to pay it off in 2 months. Now Marcus misses 1 payment. 1. And here's what happens. His interest rate doesn't just go up, it hits the penalty rate. 29.99%. That's the legal ceiling. The card company put their rate as close to the ceiling as the law allows. And it gets worse. His credit score drops. By a lot. In 1 month. The pre-approved offers stop coming. New offers arrive, from different lenders, with worse terms. Marcus is now further from approval than he was before he opened the first card. Sarah and Marcus didn't fall into the same trap by accident. Watch this. The credit card rigged system pulls 3 levers. 3. That's it. Once you see the 3, you see the whole machine. Lever 1. The minimum payment formula. Here's what the formula does. It takes most of your payment and routes it to interest, not principal. Interest. The card company decides that ratio. They wrote that into the agreement. You signed it. At a 1% plus interest minimum on a typical balance, 2/3 of every dollar you pay in the first year goes to interest, not principal. Interest. Think about that. The formula is the trap. That's lever 1. Lever 2. The interest rate ceiling, which doesn't exist. There is no federal limit on credit card interest. No maximum. None. A few states have limits. Most don't. Credit card companies are headquartered in the states without limits, which is why your card was issued from Delaware or South Dakota even though you live somewhere else. What other product in America can charge you 29.99% and call it legal? None. Just this one. That's lever 2. Lever 3. The legal architecture. Now read the back of your credit card agreement. Find the section that says any dispute will be settled by an arbitrator the card company chose. That's called the arbitration clause. Find the section that says you can't join a lawsuit with other customers. That's called the class action waiver. Read that line again. You can't sue them. You signed that away. They wrote that line, and you signed it, and now you can't sue them. Not in any court that matters. If the card company miscalculates your interest by $100, you can't join a class action with the 10 million other people they overcharged. You arbitrate. Alone. Against a company with 1,000 lawyers. That's lever 3. 3 levers. 1 machine. Designed to do exactly what it just did to Sarah and to Marcus. Here's the part most financial advice won't say out loud. The part the bank doesn't put in the disclosure. The part the credit card commercials won't show you. Now, the defense will tell you this is your choice. Credit cards are a convenience. Nobody forced you. The terms are disclosed. You signed. And that's all true. Every word of it. But here's what's also true. Now stay with this number. The credit card industry made $160 billion last year, in interest alone, from American households. That's not a side business. That's the business. Think about that. 46% of American adults carry a balance. The system is priced knowing that. The system is marketed knowing that. The pre-approved offers are sent to the people most likely to carry a balance. This isn't a product people happen to misuse. This is a product designed around the prediction that most people will misuse it. The system isn't broken. It's working exactly as designed. And it was designed by the people it works for. That's the hard part. That's the part nobody on TV will tell you. The credit card rigged system already decided your financial future, no matter who you are. If you have a good score, the system is silently taking money from you. If you have a bad score, the system already locked you out. There's no exit either way. You're inside the machine. Now I want you to do something. Look at your credit score. Be honest. Now look at the mortgage rejection rate for someone with your score. And here's the trap. If your score is high enough that you get approved, the credit card rigged system is taking money from you every month. The interest, the fees, the minimum payment formula. You're paying for the system to exist. If your score is low enough that you get rejected, the credit card rigged system already extracted what it could from you and now it's locked you out. Same machine, different stage. Either way, the system already made the call. The credit card rigged system works against the middle class and the poor. Not broken, designed by the people it serves. This channel doesn't tell you what to do about it. But if you don't know how the system is rigged, you can't know what to do about it. The first thing you need is to see how it works. Now you've seen it. Now you know how the credit card rigged system works. Now you know why the bank said no. You've seen it. And once you see it, you can't unsee it. Finance told through data. Money by numbers. Money by numbers exposes how the system is actually rigged. No courses, no newsletter, no portfolio to sell you. If that is what you want from a personal finance channel, subscribe. The next case file drops next week.